Apparently, this happened just moments ago to no doubt discuss the order he made this morning. Secretary Pompeo says after Iran-backed militia moved rockets near American bases in Iraq, the U.S. is now ordering the evacuation of all non-essential workers from Baghdad. Iran's supreme leader insists there's nothing amiss, telling state media, "We don't seek a war, and they don't either. They know it's not in their interest." Pompeo says the U.S. fundamentally isn't looking for war either, but with U.S. ally Saudi Arabia blaming Iran-backed rebels in Yemen for attacks on their oil tankers and a pipeline, could tensions spiral out of control, and what does it mean for oil markets? We bring in Kevin Book, managing partner at ClearView Energy and a member of the Council on Foreign Relations. Great to see you, sir. Let me be blunt.
Good to see you.
I'm going to be blunt with my first question.
Okay.
Does this development involving Iranian-backed proxy forces have the potential to escalate into war between the U.S. and Iran?
It does, and it always has. It takes us back a long way, Liz. It takes us back really 12 years to when the U.S. started to really pivot on their Iran policy, less aggressive on shooting down nuclear weapons and trying to stop Iran's missile development, more focused on Iraq and militias attacking U.S. soldiers. Now we're back in that space. We're back in sort of the risk profile of the height of Iran conflict from 12 years ago. Not a good place to be. We were shoulder to shoulder with the Iranians, maybe not friends, working together against ISIS. This is a step back in a lot of ways. Iran's oil production is compressed substantially by our sanctions. Economically, that means we've cut down essentially 80% of the production that they were exporting a year ago, gone because of our sanctions right now. That's our projection for May, and 500,000 barrels per day or so. And so they're acting out. They're acting out in three principal ways. Withdrawal, partial withdrawal from the JCPOA, the Iran nuclear deal. They're going and threatening the Strait of Hormuz, through which 18 million barrels per day of oil travels every day, and also acting through proxies against American assets and allies. And so all three risk arenas work to their advantages as long as they stop short of war, because they essentially raise the price of every barrel that Iran still can sell.
I'm looking at crude oil, closed at $62. It's in the aftermarket at $62.20. On a day, it should have lost value because we saw a massive massive build, 5.4 million barrels over the week. So that should have been very bearish for prices. Instead, we did not see that, most likely because of this tension. Let me bring up OPEC in general, because, yes, Iran is a member of OPEC, Saudi Arabia. We can put these names up on the screen. Venezuela is certainly a hot point as you look at that. It's far from that choke point of the Strait of Hormuz, but the tensions here, when you look at Venezuela and, of course, Iran, you can't call Iran socialist. I mean, it's an autocratic situation here. Venezuela, barely socialist, the ugliest of socialism. What's going on here where energy-strong countries don't end up treating their citizens very well?
Well, yeah, the polarization of those economies is really the fundamental flaw. Because you have no economic incentive for private actors to invest successfully in Venezuela, because you've had essentially a takings by the state more than a decade ago, again, around 2007, when former late President Hugo Chavez renegotiated and nationalized the industry, destroying the private incentive to invest in Venezuela, really chased out all the international super majors except for a few of them, and left behind a lot of opportunity with no capability. And so when you chase away the capability from the resource base and you just leave the military in charge of the oil company, you find yourself in dire straits even without the sanctions that the U.S. has put in place.
Yeah. Privatization is the way to go. And what do? They nationalize. Kevin, thank you for your perspective. We do appreciate it.
Thanks for having me.
Kevin Book.